Hello and welcome back to the Bitcoin Ecosystem Podcast, guys. This format is a little bit different. It's just going to be me and you. There's no slides in this one, and I thought I would do things a little bit differently. I have a bunch of notes that I'm going to just talk through, but this podcast is really going to be about my story and my journey from where I started from, how I came to learn about Bitcoin, and really how and what is my personal motivation in all of this. That's probably curious for everyone, right? So we're going to discuss a little bit about all of this in today's episode. And my goal is really very simple. It's helping people truly understand about how Bitcoin actually works, and why it matters, and also cutting through myths and half-truths, right? So I wanted this podcast series to be a little bit different in the sense of half of it will be about dispelling, or dispelling myths or untruths, or basically answering questions and things like that. And half of it to be more on technical topics about how Bitcoin actually does work in the first place, right? Because the reality of the situation is really stark. We're at 3% adoption. It might seem like we are further along, and I would hope that we're further along, but 3% adoption isn't really, isn't that great. We're not even at the inflection point. We're not even at that point in the S-curve where things really go interesting. So if you feel like you're not early, you are early. Okay, that's the whole point. And there's a lot of things that we want to discuss, but this podcast is really for me to share my journey, right? From 3% adoption to the macro shift that we're experiencing. What's been my story about Bitcoin? And I think it's kind of important to share because it sheds a lot of light of even how I have shifted my stance and my beliefs in Bitcoin over the years. So I think I first heard about Bitcoin somewhere in 2016. So if I had to really search my memory and remember the time when I was first learning about Bitcoin, it was 2016. And at the time, all sorts of topics about crypto were just buzzing, right? There was an energy about Bitcoin and Ethereum and altcoins and initial coin offerings, topics like that. It really felt like there was this just underlying level of general enthusiasm. And I was an engineer. I worked in an IT engineering department. So potentially there was a confluence of things that were happening, right? So interestingly enough, Bitcoin wasn't something that I just heard about in the news. It was also something that was being discussed inside my company. So I had a little bit of a unique perspective. So it wasn't just that I'm hearing about this and, we're just talking about it from the perspective of it being speculative investing and things like that. My company was at the time, I won't mention my company's name, but my company that I was working for at the time was looking at all sorts of blockchain-enabled use cases for transportation, for large-scale operations, for healthcare, for basically disseminating and having available certain documents and certain contracts amongst an ecosystem of participants, and using smart contract structures in order to disseminate those types of transactions. So blockchain-enabled use cases weren't just something that was like, pie in the sky. We were actually exploring it, and I was involved in those types of things at that time. So, I was in meetings about, talking about how blockchain could transform enterprise level operations. So I was seeing it in 2016, 2017 from two different perspectives, from all of the retail and speculative investing topics that were going on, as well as inside corporations, right? Inside the company that I was working for, that was looking at how could blockchain technology transform the way that we're doing things differently, right? So that's when I decided, hey, I think I'm going to really need to understand this technology, right? How does it actually work? I didn't know anything about blockchain. I mean, of course, I think at the time no one really knew anything about blockchain. And so this is where I started to learn, right? And I would recommend this to anyone. And it sounds crazy, but if you don't know something, go out there and learn. There are so many channels, so many avenues these days of learning. I mean, I self-taught myself all of these topics, as well as, topics of like AI and machine learning and all that sort of stuff. But I remember, and there were certain courses that I started to really take a look at. And I think this was really in the fall of 2017. I took a course, it was a Princeton online course about Bitcoin and cryptocurrencies and really understanding everything from first principles. And I found that course to be really foundational. And if I recall the course, definitely I'll recall the course, but I will drop the link in the description of this video if it's still available. But that will be quite dated. It was 2017 at the time, and it was really remarkable, right? I dove in deeper than that. Like I'm the type of person that will start with a topic that I don't know anything about and then, learn about it from all sorts of tangents. So I also took I completed a blockchain specialization at the University of Buffalo / State University of New York, about blockchain, right? Blockchain, decentralized applications, learning how to program its solidity, all of these types of things. I said, okay, I'm going to dive in even deeper. And then it's a quick tip for anyone in any career, just get out there, learn. There's Coursera, there's YouTube, there's so many avenues for you to learn. So there's really no excuse. But in 2017, the hype I can remember was insane, right? Exchanges were popping up everywhere. If you remember the time of 2017, it's 2016 and 17, exchanges were everywhere. But buying and transacting Bitcoin or any other cryptocurrencies wasn't easy, right? So different exchanges had different requirements, had different user interfaces, different procedures and processes, different ways of authenticating identification, different ways of completing the whole KYC, know your customer, and AML, anti-money laundering requirements. So you had to submit IDs, sometimes you had to submit passport information. It was all a bit much at the time, and sometimes the verification process took days. It was not transparent. It would take days, it would take weeks. Customer service was absolutely non-existent. Now, if you're trying to transact, on reputable exchanges, it's a different story altogether. But it was all new. This concept of self-custodying Bitcoin, I don't think it was really too much of a concept at the time. Wallets, private keys, security, all of those topics, it was all, I would say, net new territory for most. And meanwhile, I had coworkers that were probably, and again, I'm trying to think, and I'm not going to name names and, any of that, but I had coworkers that were likely using company assets potentially in order to conduct different types of cryptocurrency or Bitcoin mining. And of course they were doing it privately at their own homes, like in their basements or whatever, but they were also doing it, dare I say, at work. These were the days where we all had to go into the office every single day. But anyways, those were also the days where CPUs, you could mine Bitcoin with CPUs. Now we're in the exahash, era in terms of Bitcoin mining. You cannot do it on CPUs anymore. Good luck at kind of earning the mining reward in that way. But back then, it was a different story, right? And in those years, I learned something really important, which is the power of the Bitcoin ecosystem. And I remember when I started to understand how all of the piece parts came together, it was magnificent. I was genuinely impressed that you could have all of these disparate players come together in order to achieve a set of a set of requirements like this. And that's why I wrote the Bitcoin ecosystem as a technical primer in order to raise the level of education at the time. Because again, I'm seeing corporate use cases of blockchain. I'm seeing this craze of retail investment into Bitcoin and cryptocurrencies, but I'm not seeing anything in terms of understanding how it all works and the education behind it. So I thought, hey, maybe I should learn a thing or two, and hey, maybe I should write about it. So I invested the time in order to write the book at the time. It took me, I think, about 6 months in order to write the Bitcoin ecosystem, but it was therapeutic in, I would say, in many different ways. Concurrently at the same time, I had a bunch of different health issues that I was going through. And so focusing on something that was intellectually rigorous, I would say, and stimulating in this way, was I guess both therapeutic and empowering at the same time. So my Bitcoin journey actually started from, it was a point of curiosity, but it was also a very significant health time for me. So my Bitcoin journey is also convoluted with personal things that have happened along the way. But like many others, I also drifted away from Bitcoin for a while, and I'm going to be honest about that. So people ask me, where did you start? Where did you start investing in Bitcoin? So I started early on, of course, like everyone, and then you sell. You don't hold on for dear life or hodl like we all do these days. But you start somewhere, you make your money, you exit, and then honestly, I've drifted away from Bitcoin because my life had shifted priorities. There were many other things that kind of, I would say, got in the way. And of course, by 2018, we entered into the crypto winter, so the crypto bear market. And again, life priorities started to shift. But in the last halving cycle, what I will say, and it's, especially this one, I think this is where I came with a new perspective. This is the reason why I started this whole series in the first place as well. I came with a new perspective. And people ask, well, what is that new perspective, right? And this is also where I came with my, I would say, aha moment. And for me, now Bitcoin is not necessarily just speculative investing and, hey, we want to 5x, 10x, 100x your money, right? Of course we all want to do that. We want to go to the moon. We want to all drive, our Lamborghinis, like Lambos. Where are all the Lambos? I know definitely we're all dreaming about those, aren't we? But I think it's become a completely different motivation for me. And I think sharing that motivation is probably going to be helpful for many people, because I think a lot of people still view it from the lens of speculative investing or investing in order to achieve some form of outsized return, which of course is part of the puzzle, but is it all of the puzzle right now? And I think here's the real question that needs to be asked is, in today's age, how do you preserve wealth in an environment of currency debasement, money printing, and shifting macroeconomic cycles? Now, that's a lot to unpack. So most people think that if their salary outperforms inflation, that they're doing okay. But in real dollar terms, that's not often true. Or they think that, hey, if I am investing in some asset or stock or bonds, or maybe not bonds, but if I'm investing in certain things and I am achieving a rate that's greater than the rate of inflation, I'm winning, right? Or if I've invested in the S&P 500 and I'm making something like 10 or 11% year over year returns, that's not terrible, is it? Well, this is a part of my aha moment. So this is my aha moment, right? And I think that when I started to dive in deeper, and there's a lot more research about macroeconomic cycles that is out there in the public domain today, a lot of very, very smart people that have started to take a look in that, is that once you start overlaying Bitcoin halving cycles with different other cycles that all kick-started after the 2008 financial crisis, and in the period of 2009, of course, is when the first Genesis block, Satoshi Nakamoto mined the first Genesis block. January 2009 is when the Bitcoin blockchain forever kick-started, but it kick-started in an environment of collapse. And as an outcome of collapse of the entire financial system in the 2008 financial crisis. And then you had a massive injection of liquidity. In 2020 with the COVID pandemic, again, another massive injection of liquidity. And now in 2025, you have the big, beautiful bill. You have other factors that are coming into play, again, increasing all of this. And then you start to realize a pattern, these 4-year cyclical patterns. Now, again, it could be that these 4-year cyclical patterns don't continue into the future. It could be that this is something that we've only observed maybe, from the period of 2011, 2012 to 2024. Maybe that's it. Maybe you don't see it in the future. But at the end of the day, I think the more important question, as I asked, is how do you preserve wealth in a world of currency debasement, money printing, inflation, and shifting macroeconomic cycles, right? And that's really the question. And then you start to realize something else. And this is where it becomes a little bit more insidious and a little bit more opaque to understand really what's happening. Because a lot of people understand the inflation equation, but do they really understand the currency debasement equation? I don't think so. And then you start to realize holding cash in a bank account. And again, I'm not a financial advisor. This is not financial advice. I'm not telling you what to do. I'm just telling you my own personal observations of how my perspectives of Bitcoin have changed over time and what they are being informed by today. But holding cash in a bank account, when you understand what's happening from a macroeconomic perspective in the traditional finance system, you realize that is it really the safest place? And by safest, I'm not meaning, you're going to lose your money and someone's going to come and steal your dollars. No, I'm saying safe from the perspective of wealth erosion or capital preservation or asset preservation or income preservation, all of that, it's quietly eroding away. And so over the years, of course, we talked about this in a previous episode, there's been a shift of the narratives of Bitcoin. And coincidentally, and of course, for many reasons, they coincide with the different Bitcoin halving cycles, right? So we've seen it go from the age of internet money to digital gold, and from digital gold to a strategic asset, and then from strategic asset to financial infrastructure. Institutions are now buying Bitcoin. And they're being embraced everywhere. You have ETFs, you have governments, you have the Genius Act as well for stable coins. There is so much that has gone on in 2025, and yet retail interest, which has been propped up, has propped up all of the previous cycles, all of the previous parabolic run-ups. Somehow, retail interest has dropped off this cycle. It's almost like the people who helped get Bitcoin to where it is today, to achieve the rise of where Bitcoin is today, it's like they somehow have stepped aside. Now, I don't think that's completely true, but I think definitely there's something to be said about where is the retail interest today. And I'm going to do, this topic is really one that is fascinating to me. And I think I'm going to dive into some metrics in order to understand, and it's going to be one of the future episodes. But I'm really going to unpack this topic because I think it's a fascinating story in the data of where is retail in this cycle and where are the institutions in this cycle. But anyways, that's kind of tangential to all of this. But once you understand that my motivation, but at the heart of it, I would want to say this, that my motivation for Bitcoin has really shifted, right? It's shifted from, it's really shifted. It's shifted from something that is, again, some avenue of 10xing or 100xing your money that you put in. purely just an investment vehicle to a protection vehicle, a method of protecting and preserving your wealth, your capital, your income, any of it, from the insidious effects of currency debasement and inflation combined, and that is the hurdle rate. And again, I talked about this in one of my past episodes about what is the hurdle rate of 11%, so about 8% currency debasement, 3% inflation. What is that hurdle rate, and why is it so important? And I think this is the key to why Bitcoin is important. Of course, it's an inflationary hedge, but it's also a means of preservation going forward, especially when we are going to continue to inject more and more into this financial system. Debts are going to continue to increase and creep up, and money printing across all sorts of economies will just continue and continue. So Bitcoin is becoming something else entirely. And I think that's the most important thing to understand. So that's really been my Bitcoin journey. So from early curiosities and technical deep dives convoluted with my own health impacts, which, knock on wood, I'm doing much better right now, through the 2017 chaos and then writing my book, for me, it's the macro reasons of why Bitcoin is more important than ever, right? So everyone's journey is different. And I know I quote a lot from Michael Saylor, and I don't mean to. I'm going to quote from two people today, which is Michael Saylor and Lynn Alden. Both people I respect tremendously. But Michael Saylor said something along the lines of, people discover Bitcoin at the price that they deserve. And I think that's very true. Everyone's journey is going to be different. Everyone is going to come to different conclusions about Bitcoin. But right now, of course, Bitcoin is over $100,000. And it was very true that when Bitcoin was $100, people thought it was expensive. And when it was $1,000, I know for a fact, we all said, hey, isn't this getting a bit expensive? And then when it was $10,000, we all said, hey, Bitcoin is a bit expensive right now, isn't it? And now when it's $100,000, we're saying the same thing. And really, in the words of Lynn Alden, nothing stops this train. And from 100,000 to 1 million, we might see a 7-digit Bitcoin. We might see an 8-digit Bitcoin, right? And I think at the end of the day, this is not financial advice. I'm not your financial advisor, but I hope that this thing makes you think about Bitcoin a little bit differently. So if you want to get more of the perspective or the macro perspective, there are different videos that I've created. You can take a look and just search for them. But it's the macro perspective today that I think is the most impactful. Bitcoin is not just a speculative investment. It's not just something that you invest and expect to, see a return. Of course you expect to see a return. Why would you invest in anything that you wouldn't expect to see a return in? But the underlying macroeconomic reasons are becoming increasingly important. And the contrast between Bitcoin and what's happening in the traditional finance or TradFi system is what is going to be some of the most important things that propel Bitcoin even further from here, right? So in the next video, or one of the next videos, I will definitely discuss about where did retail go? Like retail has been involved in this, in all of these cycles, and in this cycle, retail has been a little bit absent. So where did they all go? Anyways, we're gonna have kind of a mix of these formats. This has been kind of my little off the cuff conversation with you all about my personal motivations and how my personal motivations have also shifted. So if you'd like to have a discussion, if you'd like to learn more, or if there's specific questions you might have, just drop them in the chat. I will try to answer them. And if there's anything and my goal is just to impart the small amount of wisdom that I have in all of this with all of you. And I think, again, the new aha moment for me is really understanding Bitcoin as a macroscopic vehicle that is a stark contrast to the traditional finance system and what's happening in the traditional finance system in terms of currency debasement, inflation, monetary policies, money printing, debts, governmental decisions, right? And you might think that this is all way over your head, or you might think that this does not affect you at all. It's affecting you today. It's affecting you right now. It's affecting you every year where you don't take action, because at the end of the day, if you're not taking any actions and you're not clearing that hurdle rate, you are effectively becoming poorer each and every single year. So there's also a lot of videos that you can watch about this topic. The one that I enjoyed the most is from the Diary of a CEO podcast with Raoul Pal. That is one of the ones that I think it's about 2 hours long. It is definitely, if you're going on a long road trip, watch it. Even if you're not going on a long road trip, watch it, because I learned so much about from that one video. But I'm just here to help and here to pass on, the knowledge that I have in all of this. I am not a financial advisor. I'm just super passionate about this topic. I came to learn about this topic all on my own. And of course, I've also learned about the shifting narratives as well of Bitcoin all on my own as well. And so my motivations for being very pro Bitcoin are actually rooted from a very different lens today than they were when I first started this journey back in 2016, so nearly 9 years ago. Anyways, I will see you on the flip side. Thank you so much. Please support my channel. Please like, subscribe, share. Let your friends know or let others know. I'm happy to do specific episodes about topics that you might be interested in. We will get into some of the technical mechanics of Bitcoin as well, but I wanted to kind of break this up between episodes that would be interesting, talk about some relevant topics, and just wanted in this one to share my personal journey with you all. So thank you guys. See you soon. Bye for now.